Hello, everyone. Welcome. Welcome, welcome, welcome. Come on in. We're going to get started in another minute or two. I want to be sure to give ample time for our attendees to get into the webinar and set up. All right. Hope everyone's having a great Wednesday night. Be sure to grab your cup of tea or do whatever you need before you settle down. We'll be together, of course, as we always are, on the first Wednesday of the month for an hour tonight. I usually can wrap it up right there at an hour, so I do want to respect your time. So come on in, get settled, and we'll get started in just another 30 seconds or so. Okay, looks like it's settling out. Welcome everyone to our monthly webinar. I'm Maddie Roach. I'm XYPN's Director of Member Services. I've had the honor and privilege of working with these fine, wonderful members of ours for over 5 years now. I can say that. I think I've just celebrated my 5-year birthday this week, so now I can say over 5 years. But really, this is such a pleasure. Every first Wednesday of the month, we're on the line to talk membership. We're here to talk about XYPN. We're here to talk about what it takes to do the cool things that the two members on this call have done, which is start and open their own RIA and then continue to run it and grow it and see it through to whatever it does become in the end. All of you are on the line tonight because you want to learn a little something about this process. You want to know what it takes, what's really behind the curtain of membership, what it really means to go out on your own and hang your own shingle. It's a really important event tonight that we do as an opportunity to really let all of you hear what it's like to be a member and what it's like to do this. We always ask you to submit questions ahead of time, but if you have questions tonight, please just use the Q&A section of Zoom and we'll be sure to get to those questions. Per usual, I have a couple things I want to remind you of. First and foremost, we want to know if this webinar is helpful. So please do let us know that if you end up joining XYPN, let us know if Jason or Courtney were the reason that you did so. It's a nice way that we can give thanks to the members if they were the reason to kind of see you into the network. And if you ever talk to them offline after this call, please do let us know that they're your referral coming into the network. We like to give them a big thanks for that. Of course, I want to plug next month's webinar. We're going to be talking about niche marketing, so be sure to stick around at least to the end of the webinar to get a link to that next webinar and register to see us here next month. Q&A down there. Let's start rolling, friends. Thanks so much. Courtney, I'm going to ask you to introduce yourself first, if you don't mind. Please, Courtney, tell us a little bit about you and your firm.
Of course, yeah. So my name is Courtney Ranstrom, and I own Trailhead Planners with my brother Morgan. We work out of Portland, Oregon, and so I live in Portland, and my brother lives in Minneapolis. So we're a fee-only firm. We've been with XY since the end of 2016, I think, roughly. And we broke off from a larger firm. We were partners there and got bought out in 2016 and then wanted to start Trailhead Planners. And we do some focus on, try to focus on socially responsible investing and ESG criteria. We don't mandate that across our clients, but we do like to include that. And then also financial life planning. So Morgan's been trained through Kinder. We both use Money Quotient. And then we're also members of the Alliance of Comprehensive Planners. So really focused on the financial life planning aspect, and then also tax efficiency and tax planning.
Love it. Oh, lots to dive into with Courtney. Thank you, Courtney. Jason, tell us about your firm.
Yeah, so my name is Jason Speciner. I am the founder of Financial Planning Fort Collins, financial planning firm, of course, in Fort Collins, Colorado. I actually launched the firm in June of 2016, joined XYPN April of 2017, actually. So I just went through, I guess, my 2-year member anniversary, got my t-shirt. Firm is about 88 client households. We focus primarily on public service employees in Colorado, and then also people relocating or moving into our area. Northern Colorado is a pretty fast growing part of the state. So Definitely have people coming in. It was kind of the unintentioned consequence of the name, as people were searching for financial planners in Fort Collins, and here we are. So firm is myself. I have one full-time employee and then one paraplanner that is remote. And yeah, that's kind of the gist of it.
Oh, awesome. Great intro. Thank you. Tonight's topic is about investment management and fee-only planning while doing both. We always have so many questions about how financial advisors, how our members charge their clients, how they are able to effectively bill for both financial planning services as well as investment management. So we're really going to dive into those topics tonight. But before we do, Courtney, kind of tell us a little bit of your background about when was it that you decided to start your own firm? I know you mentioned kind of the inflection point, but dive in a little bit deeper too. Why did you want to go out on your own?
Yeah, it was kind of a difficult situation. We owned a firm with our dad and another guy who wasn't related to us, a non-family member. And my dad kind of was phasing out. He's 67, he'll be 68 in a month. So a few years ago, he was looking at kind of phasing out and slowing down and maybe, going more part-time. And ideologically, we were not a good fit with our former business partner. We were passionate about financial life planning. We were passionate about ESG. And I had a kid, and it took me longer to kind of recover from that than I thought. That postpartum period was more difficult than I was expecting. And sometimes you need empathy from the people that you're working with, and sometimes you don't get it. So it was kind of a decision that, came over the course of several months. So it was I never set out I didn't start the year thinking I'm going to have my own firm by the end of the year. That was never even on my radar. I was just figured I'd always work with my dad and my brother and this other guy. And then it was kind of oh, wait a second, this is probably not going to be a good long-term fit. And our main office is in Fargo. I worked in Portland. My brother worked in Minneapolis. And so we decided to make the break. And it was a pain because every time you split up a firm like that, it's annoying. So we created Trailhead all by ourselves on our own. The other guy kept the firm and bought us out. And then we took about 20 million in assets with us, and our goal was 8 to 10. And, we ended up taking more than that, which was kind of surprising. And then we were able to take some for that year. And then now we have a no compete until I think 2022 or something like that. And so now we've been growing purely by, people finding us online and that kind of stuff, and really growing more of the fee only side. And we came from a pretty strict AUM
Interesting.
Setup, and it was important to us to offer the financial planning services as well, because there's a lot of people that get left out when you only have an AUM setup.
Totally.
And we didn't want to leave those people out.
Totally. We're going to dive more into that decision shortly. Jason, what was your tipping point? Why did you say that you needed to get out on your own?
For me, I was always looking for this. This is what I always wanted to do. I just didn't know kind of how to do it, right? And so I was just kind of searching for the right way to make this possible. And I mean, this goes back all the way to when I graduated from college. I wanted to be a financial advisor. I wanted to be a financial planner, and this was 2004. And I got into the field and the broker dealer space and the hybrid RIA space, and basically went around that area for 12 years, I guess, is what it ended up being before I finally pulled the plug there. But one of the things that I like to think about as far as had I done something differently or thought about this further ahead, is I'm not sure I could have pulled this off or actually started my own firm straight out of school. I think that would have been a pretty aggressive mission back then. Nowadays, the resources are there to actually like XYPN to actually find, your way, so to speak. But it was moving from this, this space where I wanted to be a financial planner, but really kind of had this lineup of stuff that I was expected to kind of offer to clients, to getting that to be more of a fit for what I wanted to do and how I wanted to offer it. And so It had to have been around 2014, 2015. I said, you know what, this is the direction and the place I want to get to. Now, what, each decision as we go needs to be kind of intentional in working that way. And so it started to kind of snowball from, where, with the broker dealer I was with at the time, like where could I custody assets, and I was given alternatives, and I picked the one that would allow me the most flexibility, when I did break away and those sorts of things. So it was just more, to answer the question as short as possible, it was just more of like, how can I get this model to be the way I want to run the practice, and not necessarily what is kind of the lineup behind the scenes that needs to be trotted out. So
love it. Jason, did you always know that you wanted to manage investments? And if so, kind of any thoughts on what to be aware of when incorporating investment management?
Yeah, I mean, so that was, my background, my degree is in finance. And so that's part of my, part of my education, part of my study. And so I knew that was going to be, and has always been a part of my career, has been the investment management part. I knew that I wanted my firm to do that. But ironically, my firm launched as financial planning only because I was still affiliated, had the BD relationships and the hybrid RIA relationships. So at one point I was like, I guess, triple registered. And the part of that helped a ton. And for anyone out there that is on the broker dealer channel, and in this same, channel, is that, if you can set it up right, you can make the process of bringing your clients into your firm very, very streamlined. And so, so that was my, my thought was that was always going to come with me, and that was always going to be, part of financial planning for Collins.
Awesome. And Courtney, it sounds like that was kind of the same situation for you, that you knew that you would be offering investment management when you went out on your own. Is that correct?
Yeah. And part of that is like, I have an MBA, and my brother is a CFA. So he was running our portfolios at our previous firm. And so it kind of felt like if we didn't do it ourselves, like, what were we doing? I mean, we knew how to do it. And I'm not saying we do anything like crazy or complicated. Like, I mean, Morgan used to run stock portfolios, and we don't do that anymore. I mean, we have some legacy stock portfolios that we run for our clients that came with us, but we don't do any new stock portfolios and stuff like that. But yeah, I think it was actually a little more important to me to do it than to Morgan. But yeah, for now, I continue to kind of push for making sure that we, play a pretty large role in the management portion of it.
Great.
Yeah.
Jason, could you tell us why you launched without investment management? Was that part of trying to get registered in Colorado?
It was actually just a product of making it easier for my clients eventually to bring kind of the entire relationship with us. So I figured if I just kind of like hard left and said like, okay, I'll catch you on the other side, it would have been a more tumultuous turnover and process than what I was able to do with the firm I was with, before, and the broker dealer I was working with before, and they permitted having my own RIA specifically for financial planning, and then just knowing the kind of the path to get approved as a financial planning only RIA, and then effectively turning that into an investment management side, at least in Colorado, is just an ADV update. And so I knew that the process would be simple enough, when I got to that point. So
smart. Awesome.
Thanks.
Okay. So Courtney, tell us about kind of how do you market your services, and what are your services? Do you exclusively market being able to do investment management, or are you more marketing kind of that comprehensive life planning you talked about?
Well, I'm on Twitter and I'm very charming. So I feel like that's where most of, the universe just finds me, and they're like, oh, she's so witty, we're going to call her. And she looks like she's drinking beer, but it's actually
I thought that for
I know, it's kombucha, I swear. It's Portland's own Dr. Townsend for Dr. Kombucha. Yeah, I have to represent my Portland hippies. So a lot of them come through the website, and I totally cannot take credit for that. That was my brother. My brother is a beautiful writer. He just published a book this year. I'm definitely the more analytical of the two of us, and he put our story out there, and he put it into words that I couldn't have done myself, and it highlights both of what we do. We put SRI on the website so that people know that that is something that we're interested in. It's not something we mandate, but it's important to us. And then also, you know, the fee only, you know, financial planning side of things and why we do that. And so people a lot of times will find us because of the SRI side, but then be like, I don't really have any assets and I need financial planning. So can we do a financial planning engagement with you? And one thing I've noticed is that, especially because of the cities that we're in, being in Portland and Minneapolis, like we're in pretty liberal cities. So there's more people looking for SRI, especially in Portland, in people that have knowledge of like impact investing and stuff like that. But I feel like it also allows people who aren't just like your standard upper middle class white people, you know, to cisgender, like, you know, heterosexual couple, like people outside of that feel comfortable coming to us. And I feel like it's because our values are out there on the SRI side, and you know, making sure that like everyone feels welcome, you know, at our office, and we all have like different planning goals, and all of our families look different, and that's okay. And so, yeah, I mean, we try to kind of, you know, be really welcoming for everyone. And I think some of the SRI stuff allows that a little bit more. I mean, you don't have to do SRI to be welcoming, obviously, but I think it helps tell our story a bit.
Totally. And you know, your values can become somewhat of a niche and people that you
Right.
focus on.
Right. And we attract people that are like us.
Right. Jason, do you market exclusively for investment management, or is it more of a comprehensive conversation? What's your marketing about?
Right. Yeah. So the big thing that we've been driving at now has been the comprehensive service delivery. And that's, we're everything from, and we'll talk about this when we get to the pricing point, but everything from pricing to, you know, exactly what that's covering and what that's providing the client is about the financial planning, investment management, and tax prep and planning, kind of all bundled together. And, you know, from my standpoint, trying to think of where the value is created for the client, I think the number one place in that, you know, conversation is that planning. It is that purposeful and intentional development of a financial plan. And then the underlying pieces that go within it, the investment management, the estate planning, the tax planning, kind of fall into place. So I wanted to build the, you know, the compensation model or an advisor fee model around that. And so that's the, you know, kind of the story we're discussing, you know, or trying to project out there for prospective clients.
Yeah, absolutely. Since you brought up fees, let's talk about them. How do you charge? I mean, what if I were to come to you, what would you tell me would be my fee?
If you're coming today, you're going to be quoted a flat fee, flat dollar fee that is based on, you know, in Colorado, we use the complexity standard, but it's so the complexity standard. So, and we have in ADV, you know, the things that we consider to make, you know, one case versus another more complex. But you'll be quoted a fee that is based on complexity, but there is some consideration for assets under management that's involved there, as far as, like, for example, the minimum fee we charge $4,000 per year covers up to $500,000 of AUM, or assets under management. And then from there, it goes to different tiers. So there is some of that tiering involved, but it never goes into a percentage basis or anything like that. And so one client may have several rental properties and, you know, a lot of estate planning considerations and very little securities portfolio, but they may be paying, you know, a fee of, you know, $8,000-9,000 per year. Where another may not have any of that, but again, because of the AUM involved, they're paying that same fee or something different. So, yeah, and that's been, I feel, a more comfortable conversation to have with a client and saying, like, this is the flat fee, it covers everything we do for you, and we think that the value really lies, again, in that planning. In addition to, of course, you know, the other ancillary services involved. So
great. Would you bill me monthly for our relationship?
It's your choice generally. So we have the monthly. We have basically it's priced as an annual fee, and the client can choose monthly or quarterly. And to be very honest, we have like 3 or 4 clients that do monthly, and the rest are quarterly. And there is a large segment of clients that are they're just paying AUM fees. We're still working on bringing those clients over to this comprehensive services pricing as well. So, and those are quarterly.
Awesome. Awesome. And I want to come back to the conversation about value because we had a couple questions about clients really seeing value both in the monthly or quarterly engagement and of course with investment management. But Courtney, if I were to come to you and try to engage you, what would be the fee conversation you'd have with me?
So right now we do offer AUM services. Most of that is for the clients that transitioned with us. We have a flat fee model and it depends on what level of service you want. So we've scaled our services so that you can scale up if you want to. So we have a one-time meeting option to kind of dip your feet in the water and like get your top 3 questions answered. And we charge $950 for that. And then we have a 3-meeting option that we call 3 Steps to Embark. And that's to really flesh out like a more comprehensive financial plan. We can usually get through a fair amount in those 3 meetings. And then you can take the implementation and do it yourself. And I never charge less than $2,500 for that. Usually it's somewhere between like $3,000 and $3,500. And that kind of aligns with charging like $950 for the one-time meeting option. And then we do ongoing planning, and we'll charge either monthly or quarterly for that. Generally, my minimum is about $4,800 a year, so $400 a month, $1,200 a quarter, depending on how they want to be billed. Some people choose quarterly, some people choose monthly, and then it's just ongoing until they stop. But we're really trying to like build that financial plan over the course of the first 12 to 18 months, and then really start working on implementing it. And that includes asset management. But we're custodian neutral. So if they have their assets at Vanguard and they like Vanguard and they want to keep them there, we don't mandate that they transfer their assets to TD. We'll help them manage their accounts at Vanguard and just sit down with them and like help them do trades and stuff like that on their computer. Same thing with our 401ks or 403bs, because a lot of our younger clients, like they don't have assets they can just transfer to TD, who we use for our custodian. And so, but they, we work with a lot of like doctors and health practitioners and stuff like that. So like they're making good money and they're able to sock away quite a bit of it, but it's all tied up in their 403b or 401k. So then we sit down and, build out how they should be investing and, what that looks like for them. And then, I'll even show people like, okay, this is how you use the retail platform of Vanguard or TD. And like, we just like sit down and like walk through it together so that they feel a little bit more comfortable. Some people are really savvy and they're like, I don't need your help. Just tell me how to do this.
Yeah.
So,
I love that. I like that term, custodian neutral. Jason, are you that way? Do you work exclusively with TD or Fidelity Schwab? Who do you custody?
I was just going to say, so TD is our primary custodian, but at the same time, it is, like Courtney said, custodian neutral. And I feel like moving assets to TD, from the client's perspective, is almost kind of more of a convenience for everyone, so to speak. It's, if they want, for example, like if we're going to bill fees to accounts, like that's the way we can accomplish that. But yeah, if they have workplace retirement plan or something like, through Fidelity, like we'll screen share, we'll go in and actually work on getting trades placed and making sure that they're, getting their portfolio in line with the overall plan and strategy. So, I've thought about it and contemplated, like, do I even approach other custodians? If a big enough relationship came along, like it might be a possibility, but right now it hasn't been a concern. So,
yeah. Jason, do you work with any of your clients without managing any of their investments?
Yeah, there are. I'd probably say if I just had to put a percentage on it, probably about 10 to 15% of clients are, financial planning only or very low, AUM engagement clients. And in fact, the meeting I just had, or actually not that one, but a couple ago, was just the financial planning only client, and just thinking of, for them, they just don't want to have, they just feel like it's easier for them to just go and kind of pull that part off, because they ultimately believe in a very, very passive approach on the investment management side. And we can agree to that. I'm not, I have no issue with that. And again, they're still getting tremendous value out of the planning process for sure. So.
Awesome. Courtney, do you service anyone without managing their investments?
Yep. Oh yeah. all of our one-time and 3 steps to embark clients will talk about investing, but those engagements are too brief to really dive into investment management. That investment management is for our ongoing clients. So the shorter duration engagements are for financial planning. And I mean, we'll talk a little bit about, how to set up their 401k and kind of where their risk tolerances are and stuff like that, and how they want to be invested. But I'm not building an allocation for them in the same way that I would for an ongoing client.
Absolutely.
So a bit more limited scope.
Yeah, we had someone ask about whether or not you target different clients with different services, and I think it sounds like you've been really intentional with Morgan to set up different service options for different types of clients. Do you find that they really, certain kinds of clients engage that 3-step process, and different types of clients are engaging you with the investment management?
Yeah, I mean, it does tend to be like older professionals that want more of the robust ongoing work to be done, just because they just want hands off. They simply don't have time to deal with it, or they don't want to because they're transitioning to retirement and don't want to sit and deal with everything. And part of it is, some people do transition from 3 steps to embark to ongoing client. And when I talked about it with them, part of it is just like, I do this every day, I'm moving 403Bs to IRAs and, figuring out what's best for people as they retire every day. They retire once in their life, so this is something that I'm really familiar with. And as they start taking pensions and Social Security, whereas for them, it's really daunting because they're like, what am I doing? I've never retired before. Whereas I've helped lots of people through it. So, so I feel like that kind of, that helps. And we tend to get, younger people in for the one-time meeting, and it's people who've never had any experience with financial planners. So they don't really know what to expect. And then some of them will bump up to 3 steps to embark after that first meeting, and say, okay, no, I'm ready for a more comprehensive, type setup. But yeah, it's mainly set up for younger people who just kind of aren't really sure.
Yeah. Awesome. Jason, do you find kind of a split among the folks that you're servicing? Do you have 2 kinds of niches you're offering services to?
As far as so I have the existing client base that it is, predominantly AUM. And as far as new clients, I mean, the service model, the comprehensive services offering is basically all we're presenting. And frankly, I'm turning people away at the door if they're looking for something else, just because I really want to focus on offering that model, because I think it's where I can deliver, the most value and kind of the best overall approach for someone. And, the kind of one-off engagements, it just sometimes, it feels like, okay, is this client someone that needs to, have this one-off engagement over and over and over again? Or is it, I mean, realistically, I think that these needs present themselves more often than 1 or 2 questions can answer. And so I just want to, stay engaged. And there's plenty of planners out there, Courtney or any other firm that offers, the hourly service model or the kind of the project-based thing. And so there's a lot of good opportunities for those people to find what they're needing elsewhere. So, yeah. I
love it. I like advisors being narrow. I mean, and being able to say that that's just not what we offer. It's a hard thing to do, but has proven to be very beneficial for you. Let's talk value, because we've got a couple questions about it. What is the conversation you have, Courtney, about the value you offer in terms of investment management, and the value you offer with financial planning? I know it's like retirement, it's a conversation you're fluent in, but we know the struggles that consumers face when putting value to the art that you guys create. So what is that conversation, and do you ever feel pushback in terms of, I just don't see the value?
Yeah, I actually had pushback a little bit last week from a prospect who was like, I didn't expect your fees to be so high. And I'm like, well, I mean, my hourly fee ranges from $250 to $350 an hour. And a one-time meeting takes me about 4 hours. It's, an hour prep, 2 hours a meeting, an hour to write up the report and send it to you. So $950 is a little bit of a discount. And then, same thing, if you factor that in with 3 steps to embark, but you're doing 3 meetings, I'm like, it's all, right. It pretty much aligns with what we're doing. And what we found is 3 steps to embark is actually a bit too much work, and we'll probably phase that out and just say you can either come in for a one-time or do ongoing planning with us. But on the investment management side, I mean, that's such a tricky thing because, yeah, when people are like, well, you know, I can just pay however many basis points to go get an ETF. And I was like, an ETF has never done financial planning for me. I'm like, yeah, you can go get an ETF, but like, they're not going to help you plan for college for your kids or, you know, like help you save for a sabbatical or something like that. Like they're just a place to park your money for whatever period of time to like help you meet your goals. So I really push the financial planning side of things. Like we use ETFs, we use a few different mutual funds, and on the ESG side, we do use a bit more mutual fund just because that's what's available. There's not as many ESG ETFs. But we're using just like a really, you know, diversified basket. Mm-hmm. One thing that we really push is diversification, both, you know, sector and global. So we don't hold, you know, a massive amount in like US equities. We try to make sure our clients are always diversified with international markets and emerging markets as well. And we're really committed to that, even in years where that like seems unpleasant, which happens. We're still really committed to that long-term diversification and just really practicing like long-term investment management. And I feel like that's the value you get out of an advisor is like they don't let you do stupid things with your money. Like like they're kind of protecting you from it. But it's merely like one piece of financial planning.
Yeah, absolutely. Jason, to get more direct to the caller's question, how do you justify the value of AUM in instances when it ends up being far more expensive than hourly planning?
Right. Well, and so I mean, it just depends on what that person or what that client is seeking from the relationship. So if they have, you know, just a handful of questions and they are able to or believe in like a passive management approach and they just want to buy a couple index funds, like I'm not necessarily going to try to convince them that I'm going to like blow them out of the water with all of these, you know, amazing investment picks or anything like that. I mean, I think Courtney stole the thunder there as far as like that biggest value I think in any advisor, whether it's, you know, you call yourself a financial planner, you're strictly an investment advisor, whatever it is to help your clients not do something just terribly dumb, for lack of a better term, or make the wrong decision at the wrong time sort of deal. So, you know, for me, just from a value standpoint now, I mean, I just feel like the true value of the relationship is really in the preparation and planning of, you know, kind of the client's affairs. And that includes investment management, that includes a lot of other areas, but keeping them in a portfolio that makes sense for their situation, makes sense for their strategy, and making sure that it's kind of well pruned is really where you get a lot of that, you know, that value. So I think that's, you know, on the AUM side, like just where, you know, at least I find that it makes sense.
Yeah, absolutely.
And can I add, Maddie, onto that?
Please.
Like, I really don't justify any longer if the value of AUM is way more expensive than the hourly planning. Like, that's why we do the flat rate thing. You know, it's like there kind of is a cap for how much, you know, you should be charging someone depending on like how much work you do. Do you do that much? Do you do $20,000 worth of work for a $2 million account versus a $1 million account? You know, like, you know, that's at $10,000 a year, you know, revenue. I don't know. This is where I differ than some other people and probably fall more on Team Alan than Team Michael for some of the fee stuff.
Yeah, absolutely. And callers, please, if you want either Jason or Courtney to explain any of the things that they're talking about, just drop it in the Q&A. We've got some great questions coming in. Let's ask one of the callers' questions. Talk about your tech stack when it comes to investment management. Jason, what do you use? Is it just TD's Veo or what's your lineup?
That's part of it. Yeah. So I do use iReval through TDA, which if it wasn't through TDA, apparently is the most expensive rebalancing software out there from what this piece showed. It's way up here in the upper right cost-wise. So do use iReval, which has been a tremendous help as far as managing portfolios and basically trade across the client base in a day, and it's pretty darn seamless and is really helpful. Do use Orion for performance reporting and fee billing. And that, through XYPN is at a significant discount. So that's been awesome as well. And then use actually Riskalyze for risk assessment, investment policy statement creation. Really like to take that, kind of that single number score sort of thing and embrace that as kind of the what I call the Rosetta Stone of risk, and just a way for the client and I to understand. We both know what a 50 out of 100 means. We don't necessarily both know what moderate or moderate aggressive means, or don't have the same definition of that. So those I guess 3 pieces are really the kind of the core of how a portfolio is managed. Yeah.
Beautiful. And just because we get a lot of questions about this when advisors join the network, Jason, just give us kind of what the number of clients is that you're servicing in terms of investment management, and then how many hours a week do you think you spend investment managing?
Thinking of investment management clients is probably, out of those 88 houses, probably going to be somewhere from 75 to 80. And as far as, a lot of that depends on the ongoing management. We have our review schedule set up so that the clients are getting notified for reviews. They're self-scheduling their appointments. They're getting sent out, their risk assessments. They're coming in for the review. And so that just depends on kind of the engagement with that for the client. If it's on the day-to-day, and maybe that's not the process, maybe it's reviewing like the trade log, because I do kind of go through that and kind of manage the compliance side to make sure that we're good there. But a predominant amount, a big part of the kind of the busy work, so to speak, when it comes to investment management time, is usually at the kind of the quarter end and quarter beginning, with both getting the reporting and the fee billing done, and then of course getting the trades placed. And we do a quarterly kind of strategic rebalance to do a little bit of repositioning there. So, yeah.
Great. Courtney, what's your tech lineup? I know Morgan's a CFA, so it might just be his brain, but.
I know, right? Yeah, this is actually one of my favorite questions because I love the tech side. So like Jason, we use TD and we use iRebal. Morgan is definitely like my biggest asset. And he does most of our trading. Like I run one model that's like, I call it ESG, heavy on the E, because I try to be as like fossil fuel free as possible. But for the most part, he does a lot of that, which is awesome. We have been using Orion, which is great. It was a little too robust for our needs, because we really are pushing more of the financial life planning and some of like the more ACP models. And so we're in the process of switching to Bridge. But if you are, using Orion through XY, like it is a really great tool. It just was overkill for kind of how our practice is morphing. On the investment management side, we just didn't need like that level of stuff. I've also used Advizon, which is good. It's not an all-in-one solution. You have to, like, they say it's a CRM and a portfolio management system, but you really need to have your own CRM separate from that as a CRM. And then I've used Black Diamond as well, and they're fantastic. They're very expensive, but it's probably my favorite system out of all of the ones that I've used. We're like Goldilocks, like we can never quite decide, like quite find which one we want. We use iRebal, and then we have a subscription to Quanti, which is fantastic. It's so cost effective, and you get really great, performance data out of there, indices data. That's been, really great. And we came from Y charts, and we've been super happy with what Quanti provides. And then we use StackUp for our risk assessment software. We don't do a ton on the risk assessment side. We've used Riskalyze, and we just found that we weren't using it a lot. So it wasn't really worth the cost for us. And we just ended up managing assets a little bit differently than that.
Yeah. And then same question that I asked Jason, about how many clients are you servicing with investment management, and how long do you think every week you're spending on that?
So I would say it's about, I'm looking at my report right now because I had it out for quarter end. It's probably like 35 to 40 households on the investment management side. And it's busiest like the first few weeks of a quarter, the start of a quarter, because you're sending out reports, running fee billing, and Morgan does our rebalancing each quarter, that kind of stuff. So I mean, it just ranges anywhere from like a few hours to maybe 7 to 10 hours, depending on where you're at in the quarter.
Yeah, absolutely. I asked that because one of the questions our callers had was contrast kind of your tech lineup with XYIS. XYIS overlays on TD Ameritrade, and they use the Orion system. So you do get access to Orion there. You're paying for XYIS for the servicing component, because what we'll find is that a lot of advisors at Jason and Courtney's threshold end up spending a lot of time dealing with investment management, and it just becomes not worth it at that point. It's easier and more cost effective to outsource it. So we see that for folks that are just launching, that they know that they just need to outsource the expertise, but still want to offer it. And then we see the advisors kind of on the other end of the spectrum using XYS for opportunity just to save time and quite frankly, to save the headache of having to work directly with TD all the time. Jason, you've got a question from a caller. Discuss how you integrate your tax practice into financial planning, and why not integrate the two into one firm as opposed to two separate businesses. Great question.
So the beauty of that is they actually are the same business. So I am of the belief and compliance, even regulator recommendation, be darned, that it's going to be one practice. And so Fort Collins Tax Service LLC actually is the RIA, and Financial Planning Fort Collins is the brand name of it. So do have tax only clients that I think is effectively like getting paid to have a kind of a warm market, essentially a bunch of warm leads, and that's who we that's a big part of our ongoing development and marketing and drip newsletter and so on. So yeah, it's a part of it, but it becomes an inclusive service when the client engages us for financial planning, and it becomes the full blown. We do your tax return, we provide the audit rep for you if it ever were audited, that whole thing. We give the whole kind of umbrella on the tax side for comprehensive services clients. Fabulous. Yeah.
Courtney, a caller asked, what was the risk software that you use again? It was Quanti, if I heard you correctly.
Quanti, Quanti is KWANTI, and that is more like an investment research program. And then StackUp is the risk assessment software that we use.
Cool. And any reason you don't use Riskalyze?
Well, we had up until January, and for how much we used it, it just was overkill for us. Like we didn't get our money's worth because we didn't use it a ton. And StackUp is super low cost. It might even be free for the first year. I don't know. We find that we tend to manage portfolios more in line with ACP's model, and in that case, you don't need the same like risk assessment, that kind of robust risk assessment software, and we're not really using it to like build our IPS in the same way. Yeah. So it just was overkill.
Okay. Awesome. I did miss a question that was submitted earlier about kind of what are your thoughts on competitive and appropriate pricing for AUM, kind of going back to the pricing model. Jason, what do you charge for AUM, and why do you think it's appropriate?
So AUM only, if we did accept like a new client to be AUM only, I believe it's 1% up to 250, then it drops down to 90 basis points, and it goes pretty low. I think by $1 million we're at 65 basis points, by $2 million we're at 50, and it's tiered pricing the whole way through. And the comprehensive services model, honestly, the way it's built is the flat dollar pricing doesn't necessarily mirror it. There's definitely a little bit more from a dollar standpoint on some of those tiers. But it comes back to what Courtney had mentioned about, are you really doing that much more work for, this $2 million portfolio versus this $1 million portfolio? And, where can that be kind of that right point of not just overcharging for something you're not really delivering a lot of value on? So that, from a percentage standpoint, I think we kept that pretty low, and then now with the flat fee model, it's really based on just, again, where the value can be delivered and how we can work with the client to actually progress their plan forward.
Yep. Awesome. Courtney, same question.
Oh yeah, we charge 1% on the first million, I think. We have it in our ADV, I think, to charge up to 1.25% on like the first 250 or 500,000. We changed that just because it's a lot of work to onboard someone, especially in that first year. So don't ever discount the amount of work it takes to onboard like a new investment management client, especially if they do have a smaller account, but like pretty robust, financial planning and investment management needs. And so we set it at that because I kind of look at the ADV as like, what's the max, because everything is negotiable, but I can't charge more than what I've put in my ADV, but I can charge less. So we put it to 1.25%. Most clients are going to be at 1% or 90 basis points on the first million, and then it tiers down from there.
Yep. Love it. Awesome. Callers, if you have questions about their fee structures and what they're billing for AUM, just let us know. Okay, we've answered that. We do have a question just about general tech stack. Courtney, what's your lineup for financial planning software, archiving, all that good stuff?
Yeah, so we use eMoney for our financial planning software. I don't think that eMoney can be beat. I think it's the best program out there. I know places use Money Guide Pro and Right Capital. We had Right Capital for a while, but eMoney is the best that you can get for your money, I think. We use WealthBox for our CRM, and let's see. I'm trying to look and see what's like in my bookmarks bar. We use DocuSign, which is fantastic. We use XY's Advice Pay, which we've had like zero trouble with. We've been really happy with that. We don't use the signature stuff like through Advice Pay because I really like DocuSign, so we're staying there. And DocuSign's free with your TD. And then we use Dropbox for sharing stuff with clients and like storing client files and stuff like that. And then we just use Google Suite or Google Office or whatever. So that's like our email. And then that gives us access to Google Sheets and Google Drive. And if we do want to use that, I hate Google Sheets though, like just use Excel. But if you want to use Google Sheets, then like we pay for that as well.
Yep. Awesome. Jason, what's your kind of quick tech stack lineup?
So I'm on Team Right Capital. I think Right Capital is a really great financial planning tool. I actually, yeah. And to be very honest, I've heard so much about eMoney. I've never even demoed it, but I'm really comfortable with Right Capital. I know how to work it. I know all its little quirks, or most of its little quirks. So on the financial planning side, that's what I use. I'm doing the same kind of bookmark cheating here. So
I love that.
We actually use Salesforce for the CRM. So it's kind of the part of the decision with that is I've used Redtail, I've used WealthBox. Salesforce just fit best because I really like workflows and I like to have automated processes in place. And so it's something we just will never outgrow. Orion, we already talked about. Veo, we already talked about. Riskalyze. Do use DocuSign, both a kind of a in-house flavor of it and then the TDA version, just because some of the tax stuff requires a different version. Acuity for scheduling. So one of the things I really like about the age of this kind of self-scheduling model is you can just send a link to a client and say, hey, pick a time on my calendar that's there. And so that's been so helpful with eliminating that back and forth for sure. And then we use QuickBooks for bookkeeping and trying to see what else kind of matters in here. I don't think I missed anything there for sure.
No.
So.
Yeah, we use Xero for our bookkeeping, and Calendly for our scheduling, and Google Calendar that Morgan and I share across the board. I like Xero because they're out of New Zealand, so like they generally do like military time, and I don't know, there's just like some little quirks because they're not a US based company that I kind of enjoy. It makes it a little bit more whimsical.
Yeah. So not only are you diversifying your portfolios, but you're diversifying your tech stack.
I know, exactly.
That's awesome. We're rounding out the hour, if you can believe it. I feel like we just started, so I will be asking just a couple more questions. Jason, you have a specific one. Talk a little bit more about the complexity-based pricing. How do you get to your tiers? Is it largely AUM, net worth, or something else?
Yeah, so and they are on this whole kind of system, and how it's determined is actually on the website. So if you go to financialplanningforcollins.com, you go to how it works, and then there's a pricing button, and it kind of just brings up the whole talk about, how we come up with it and what it means. There are tiers for sure. So there's the 500,000 is for $4,000 flat fee that covers up to that amount. And so it's basically up to a certain amount of AUM is covered by a specific fee. As far as developing what that fee is, it's really just in part just kind of a professional judgment of where I think the value can be created for the client, how much time I think will be involved with working with that client, both upfront and on an ongoing basis, and trying to get something that is documented and justifiable. As far as like if a regulator came in and said, why are you charging this client this versus the other? We have, a customized services proposal that goes out to clients, just lists like, this is what we're going to be working on. Here's how it's going to, all take shape, and here's what it costs. So that's how we develop. Yeah.
I currently use eMoney at the RIA where they work. Can you compare and contrast eMoney and Right Capital, which is part of the XYPN tech stack? They're both part of the XYPN tech stack, but Jason, I think since you probably, you said that you tested, no, your team Right Capital.
I'm team Right Capital, never used eMoney. So
you tell us the difference between eMoney and Right Capital.
Wait, me?
Yeah.
Oh, okay. I've used Right Capital a little bit. I didn't think it was as robust as eMoney, but I haven't used it for like a year or two. I think pricing wise, Right Capital, if you're going out on your own, pricing wise, or Capital probably makes more sense if you don't want to spend the money on eMoney, especially in the first, couple of years. But we came from an office that had eMoney, and I just never really fully embraced Right Capital, and going back to eMoney was just kind of almost like a relief for me. Like I just prefer it.
Yeah, I'm amazed by how many members stay true to the software that they are most familiar with in terms of the previous firm that they worked with. The money, right. the folks who use Money Guide Pro, it's like that's their only option. I love it. I call them the pro, the Money Guide Pro users, because they're just very committed to Money Guide Pro. But we really do have a nice split among eMoney users and Right Capital users, and it really is that threshold of like, do you just need that additional stuff? But Right Capital really has built out a solid offering, and the Right Capital subscription is included in XYPN membership. Brody asks, I think Courtney mentioned this, if not, ignore the question. How do you incorporate financial life planning into your practice, and what does that look like for you, Courtney? Great questions tonight.
Yeah, these are really good questions. So Morgan's trained in the Kinder method of financial life planning. We both done the Money Quotient training, which is a firm, it's a nonprofit company out of Portland that trains for financial life planning and really brings you like a systematized approach to it. And so it's using some of the documents that we have a subscription with a Money Quotient. So we're able to use like their documents and forms. So it's using some of that. At its most basic though, I describe it as aligning your resources with your goals. And your resources are anything that, can be financial, time, whatever. And then the goals that you have. So having a goals conversation is always part of our meetings, especially early on. And it's more about just talking about, I don't want you to just get to 65 and have your retirement money and then kind of like sail off, like I want you to live a good life while you're accumulating assets. I want you to do the things that you want to do within the confines of your resources, like we're not all billionaires. So, we're not all Jack Dorsey. Like we can't only eat one meal a day and then like go and sit in the mountains in Tibet for like 2 weeks or whatever. Weirdo. So like, dude, eat a burger. But yeah, like just talking about what those values are to your clients, because you can live a really good life on, you know, 50,000 a year, and you can live a really good life on 250 a year. Like it totally depends on what your family's like, and you know what's going to be important to you. So yeah, I try to, you know, let clients like flesh that out.
Great answer. Thanks for explaining that. Jason, a couple more questions came in for you about the tech stack. What tech software do you use? And do you use Right Capital's aggregation, or do you use Orion's?
So tax software, I use Drake actually. And I think I did see a question about, you know, my tax background. So I'm an enrolled agent. I do the returns myself, but with help of Regina, who's been fabulous. She's my employee, or actually our client service and engagement specialist, but it became a much easier process this year. As far as the account aggregation, we use Right Capitals. Part of the thing with Orion is I believe that there's an add-on to I think it's like buy all accounts, and there's another service, Ovo maybe, where you can add in an aggregation there. Again, Orion kind of just like Salesforce, like we're not using all of it to its full capability at this point, but it's a scale thing. It's just thinking of something we can't outgrow it. So as time goes on, we probably will incorporate some of their aggregation stuff. And as aggregation gets better, aggregation is still a tricky thing, but it's improving, and hopefully we'll get better to the point that those links are solid. So
yeah, awesome, cool. Okay, we're approaching the end of the hour, which is wild. So let me just say a couple things before I ask my final question. Again, I want to reiterate, thank you, Jason and Courtney, for being incredible member hosts. But please, callers, let us know if this was the reason that you joined XYPN. We really, really want to know if Jason and Courtney were the tipping point for your application to XY. We thank them generously, so please do let us know. We do have a survey for you that we will send out. We would love to know your opinions about these webinars and whether or not they're effective. XYPN Live is quickly approaching, if you can believe it. We're already in May, which means we're just a few months out from our national conference. Early bird pricing changes June 1st, so you will get an email in your inbox after this call with a little secret discount code to go get your ticket. So it'll be about as cheap as you can get it if you can check your inbox after this call. Also, don't forget to register for next month's webinar. We're going to be talking niche marketing with Stephanie and Emlyn, two fabulous members. I will not be on the call, but our wonderful member experience specialist, Taylor Deerdorf, will be substituting for me, and she will do fabulously with two fabulous members. So back to our final few minutes. I have two questions, because I do like this question that came in. What are your thoughts on Schwab's offering of the $360 financial planning fee? Courtney.
I think they're going to find out what everyone else has found out, and that is financial planning takes time. Yeah. And $360 gets you about maybe 1 hour of financial planning with a CFP. It takes time, it takes expertise, and you have to pay for it. You know, like it's just, it's gonna be the same as all the other places that are trying to, like, you know, automate financial planning and be robo-advisors, but, you know, really try to automate that financial planning portion of it. And I'm not worried about it personally. I never lose sleep over any of that stuff. Like,
good.
Yeah.
Good. We don't want any of our members to lose sleep over. Jason, what are your thoughts?
I cannot imagine that they're providing much more than with something they were already giving clients in the first place in one way, shape, or form. I just think they've rebundled it and put $30 a month on it as a, I don't know, a way to maybe create value perception, or maybe even a way to offset costs. Like, I just don't think they can't be delivering. If they are, good for them, but they cannot be delivering that one-to-one personal touch that a firm with, you know, a direct relationship and again, that one-to-one relationship with the client can deliver, and the time involved in creating and maintaining a financial plan. So,
yeah.
But
at the very least, at the very least, you know, it is showing us that they're catching on that this is a need. So that is a good sign for us that even Schwab thinks that financial planning is needed. So whether or not we agree on their pricing. Courtney, final words for our callers if they're on the fence with starting their own firms. One piece of advice.
It's hard. and the first few years are a slog. So, you know, we just started our third year. If you're used to a higher paying job, that kind of sucks because your revenue definitely goes down for a while you're like rebuilding. But if you're on the fence and you feel like you're in a position that you can make the jump, it's fantastic. I mean, I have small children, so it's been great for, you know, just work-life balance, and I get to work with my brother, so that's pretty rad. And you know, I feel like entrepreneurship it's very scary, but it's overall very fulfilling.
Yeah, absolutely. Great answer. Jason, how about you? One piece of advice for folks thinking.
Maddie, remember the little interview we did when we didn't have any audio, and I talked at the end about how you got to sweat the details and the little things and this and that. And I thought about that answer after the fact, and I realized I didn't give my favorite answer to this question. Cool. And that is, begin with the end in mind. So just think about what kind of firm you want to build, what you want it to look like 5, 10, 15 years down the road, and start your process there. Start figuring out what needs to happen from day one to make that firm a reality. And, you know, just like goal setting, right? If you put it kind of out there and work towards something, it's going to be a better result. So that's my tip.
Love it. Great tip. That's kind of manifestation 101. You got to think about it. You got to feel it so you can actually get there. That is awesome, Jason. Courtney and Jason, I could talk to you guys for hours, but it's kind of late by where some of you guys are. Callers, thank you so much for joining us every month. These are such wonderful calls for us. We really do hear some good feedback about them in terms of them being helpful for you. So we will keep hosting them until they aren't helpful anymore. Jason and Courtney, thank you, thank you, thank you for the work you do for your clients, for being awesome representatives of XYPN, but especially for just being wonderful human beings. Have a great, safe, and wonderful Wednesday night, everyone. I will see you back. I will be back in July. You'll see Taylor next month. Goodbye.
Yay. Bye.
Thanks, everyone. Bye.